Learn to measure the financial reaction of the actions that you take, both in your personal as well as professional life. Fight with your spouse, you will have to go to office without tiffin. There is a financial reaction. You have to order from outside. If the food is bad and if you suffer, there is a financial reaction. You have to go to the doctor. So you see, the action that you created in the morning has a ripple effect. Yeah? Yes or no? Do you agree that every action has a financial reaction? Type FR in the chat window if you agree. Type FR in the chat window if you agree. Very good. Very good. Now let's proceed. How to articulate financial reaction of every business action. Now you all have agreed that there is a financial reaction. So what I need to do, I'm going to go out of my presentation. I'm going to share one confidential file. Of course, I have taken the permission from the customer whose data I am sharing. I have changed little bit numbers to protect his identity, and I have also hidden his name. Okay. Now, what we did, this one customer, he usually, whenever we are in a financial problem, the obvious logical thing which we all think is to increase sales. Sales बढ़ाएगा ना तो problem solve हो जाएगा. सब प्रॉब्लम अल्टीमेटली क्या है सर? सेल नहीं है. सेल बढ़ेगा, प्रॉब्लम विल बी सॉल्व. Sorry, again use Hindi. Let me say that in English again. If you increase sales, all your problem will be solved. At the end of the day, it is the sales which solves the problem. This Excel sheet will prove to you that every increase in sale leads to more loss of cash. Sometimes, in fact, majority of the times, increasing sales is not the solution. We have already discussed that cost cannot be further brought down. Now I am saying increasing sales is not the solution. Majority of the times, you have to understand that your sales margin and cash has inverse relationship. With every increase in sales, your cash gets stuck more and more in business. Don't believe me? Look at the actual real case study. Okay, let me open his file. Okay, are you able to see my Excel sheet? Is my Excel sheet visible to everyone? Yeah, confidential brand private limited. Look at this guy. Okay, this is a manufacturer of industrial battery chargers somewhere in interior of Maharashtra. He runs a factory, very complicated machinery. His battery charger looks like a Godrej ka kabat, which has a lot of PCBs and ICs in it, and they charge large industrial batteries. Okay, so in 1920, he was at about 16 crore top line. I hope you understand top line, sales, revenue. Okay, and his GP, gross profit was 6 crores. Okay, and then he had this working capital position. He had to recover almost 8 crores from the market. He had to pay 9 crores to his suppliers, and he was sitting on an inventory of almost 2.5 crores. This is actual figure, so you see all the odd numbers. This is his real situation of 1920. Now let us go 1 year forward. In 2021, obviously, all of us were hit by COVID. So he was hit by COVID marginally. His turnover came down to 13 crores. His gross profit came down to 5 crores. His net profit was 1 crore. He had to receive 6.5 crores from the customers, receivable. 4.5 crores he had to pay. He was sitting on an inventory of 2 crores. In short, a negative cash flow of 1.5 crores. Now come Contetra, my advisory team, consulting team, gold medalist, chartered accountant, everybody coming in. Don't worry, Mr. So-and-so, we will solve your problem. First step, you make budget. What is your 21-22 budget? So first we said, if you really want to make a cash surplus budget and all of that, we didn't realize the depth of the problem. So we said at least do 22 crores in sales if you want to keep your head above the water and get desired profit. But then we said, let's plot the numbers, no, Baba. So we said not 22 crores. Let us keep a modest target of 15 crores. 13 crores to 15 crores, modest target. Okay. Modest target, if we extrapolate the COGS, the inventory and all of it, the closing inventory here is becoming opening inventory here. So we will get a gross profit of 5.5 crores, which is good. On a 15 crore top line, if you are getting 5.5 crores, you almost 31% margin. Yes or no? Your PBT is 1.5 crores. You should be happy, no? In a post-COVID year, you are making 1.5 crore on a sale of 15 crores. Good. But look at the working capital position. You will be stuck with receivables of 7 crore 39 lakhs. Creditor, we forced the creditors that you have to pay on time. So the creditors we brought down to 2.37. You will still have inventory of about 2.3. And you will be in a miserable condition of negative 2 crore cash flow. Your cash flow will be negative 2 crores. Negative 2 crores. Which means if you increase your turnover from 13 crores to what is happening? Sorry, by mistake. 13 crores to 15 crores, you go from 1.5 crore negative to 2 crore negative. So is it advisable for this gentleman to increase sales? The more sales he increases, the deeper is his problem becoming. Don't agree with me? Let us see. If I increase his sales by further 15%. So from 15 crores, it goes to 17.25 crores. The impact is 2.25 crores. Look at the impact on cash. Look at the impact on cash. See this? He will be from negative 195. He will go to negative 3.23 crores. Can you see if I keep the debtors day, creditors day and inventory days same? Friends, are you with me? If I increase his budgeted sales from 15 crores to 17 crores, his negative 2 crore cash becomes negative 3.23, means further damage of 1.27 crores. This much CC limit his bank will not give. Let me tell you upfront. He is fighting with the banker because he's not getting any CC limit increase. So we said increasing this is no problem. Can you reduce cost? Can you reduce cost? Fight with your supplier and tell him to kind of, help. Can you reduce cost by 5%? Can you reduce cost by 5%? If you reduce cost by 5%, no, it's not helping much. We're still at 291. No, it's not helping. What do we do then? Can you increase margin? Can you increase margin by, let's say, 4%? Does this help? Increase price, increase margin, turnover remaining the same. No, we are still stuck. It's still the same. It's still the same. Yeah. So what will help then? Can you reduce fixed cost by 10%? Can you reduce fixed cost by 10%? Yeah, this is helping. This is helping. If you reduce fixed cost by 10%, no, this is not helping. Still 332. Now we suggested that you focus on your customers. If this 90 days, if 180 days, your customer is paying you in 180 days, okay? If your customer is paying you in 180 days, if you can somehow bring it to 120 days, You see the magic? What is happening? If you bring it down to 120 days from 180 days, what is happening? Your negative cash of minus 195 is becoming minus 44. You have a positive 1.5 crore ka impact. If you bring down your inventory from 90 days to 60 days, bang, your cash surplus. You have surplus 19 lakh in your account. Instead of having negative balance of 1 crore 95 lakhs, you are having a positive balance of 19 lakhs. And all you have to do is focus on working capital. The business owner is looking at me, his little voice. No, Vishal, it's not possible. Our customers are used to paying us in 180 days. What if I lose business? Started giving ultimatums to the customer. You have to pay on time, boss. Now it will not work. Before COVID, we were adjusting. After COVID, you have to adjust. Otherwise, we will not survive. Strategy change. I told you 4 steps, no? Second step, third step, I said innovation. Idli batter example. I gave him idli batter example. He was first selling this charger to government companies and electrification boards. You know how government is. They don't pay on time. They don't pay you full. You have to give bribe for getting payment out every time. Okay. We said you change the game. People change the rule. You change the game. So he said, how? He said, instead of supplying to the government directly, you supply to the vendors of the government. So we got empaneled with L&T. We got empaneled with Siemens. So instead of directly supplying the industrial battery charger to the government grids, L&Ts and the Siemens of the world, they make grids for the government in remote areas. And when they make grid, you need a charger, no? Without the charger, how the grid will be made? So we started supplying to the OEMs with a lesser credit period, 30 days, 60 days. And still, even after delay, if we get money in 90 days, we are still happy, Baba. See, at 120, I am cash positive. If this becomes 90, bang, I have a surplus of 142. You see how it works? But for this, look here, ladies and gentlemen, look here. For this, you have to plot the data in Excel like this, no? You have to put your company's data in an Excel sheet like this. And what I have put, it's nothing, no? It's just a simulator, right? How many of you would like to put your data in this simulator and check what are those 4 steps that you can take based on the numbers that are coming out? In this case, listen to me carefully. In his case, we saw sales is not the solution. Fixed cost is not the solution. Margin is not the solution. Working capital is the solution. In your case, it might be something else. You don't know which lever will be beneficial to you. Maybe in your case, increasing sales might be a solution. But unless you put the numbers in this perspective, how will you come to know? And somebody's got to put it in this perspective, no? So how to put it in this perspective?